Hello everybody, welcome to another update on the gold forecaster index. So in my last video I said gold would go up slowly, and that has also happened since last month. It went up a bit. Let's see what the new data point tells us today. So let's look at the gold forecaster index. And the latest data point says that gold will be going higher. See an uptick here, not a big uptick, but it's positive. So I think that gold might be rising until the end of the year. Taylor rule rate still positive, very high. Misery index went a bit down, but manageable. It's still very high. Real output. Oh, this is a new data point. This is a new data point. This is moving back up. So that's very positive for gold. It's not above the zero line yet, like in 2000, 1990 and 2001, 2010. So whenever this happens, then gold goes up. You see these spikes? Spikes here, spikes here, spikes here. So I expect that this could go higher. This could continue higher. And that would give a spike in gold, probably. So this is a very good data point. This tells us that we have a trend change. So Chile and Peru, let's take a look. Production is going down. That's good. Peru has seen production going up, but not that much. It's actually still flat. Gold demand from institutionals is still going down, so we need to see this change higher. Yeah, let's wait for this to happen. I think this is a bottoming out process. And when the institutionals come back to the gold market, then you will see explosions. So get in right now, because when they come in, then this gold price here could skyrocket like it is doing right now. COMEX gold also still going down. So there's still no interest in gold. China gold demand, silver demand is flat. So in October we had almost the same gold demand. It was a bit lower actually. India is the same. So India gold demand is stable. Here we still see the head and shoulders. We need to see that reverse. In China, we see some silver demand coming back. So you see here the bottoming out process, same as here. And whenever this happens, you get a spike in silver. So I would now start looking at silver. This is a very bullish sign from China. Probably we will see a spike in silver. Also here, you can see that the registered silver is going down. This is a bullish sign because they're trying to manipulate silver down by throwing silver onto the market. We have seen that here in 2016, and then silver started to spike. So when this starts to bottom out, then we will see silver spike up. And where does this come from? From JP Morgan, of course. So JP Morgan is unloading the silver at the COMEX vault. And if this starts to reach around this point here, then we should see a bottom in silver. So wait for this to go somewhere here, maybe at the end of this year, and then silver could go higher. No change here. US mint sales were very good for gold, not so good for silver. But this trend is very positive for gold. So I see the US consumer getting into gold right now. Premiums are still at the same level here. Premiums for junk silver also very high, very good sign. Shanghai gold premiums were lower, so that's a bit of a bad sign. So it went to 0.3, it was at 0.7, but it's still positive. Just to let you know, the Chinese demand is going a bit down. Upmex premiums are still high, so gold should go higher. PSLV premiums seem to be still negative, so you want to see this go back to zero. So the investment community is still not buying a lot of gold and silver. COT reports were also not that great. More shorters. Here also more shorters in silver. Not a good sign. Here you can see that as well. The short squeeze has happened. So this was the short squeeze here. So the amount of managed money short positions have now gone down and silver has squeezed up. So don't expect another massive increase in silver, but it will probably grind higher, but not shoot higher because the shortest are now gone. Nothing to see here. Flat. Lease rates. Something really special is going on with the lease rates. So we have here an inversion of the 2 month with a 12-year month, 12 month, which is very odd. And the same is visible here in silver. 2-year is flat, but we see a massive spike in the 12-month rate. Not sure what to make from this, but the trend is higher, which means that silver could go higher. Typically with these spikes up, when you have a spike up, you see silver go higher. For example, also here, spike up. Here also spike up. So I expect this spike to drive silver higher. So it's actually looking very well. Swiss franc is bottoming out, so that's also good. Tips rates, very flat, nothing happening here. But gold is at the bottom of the range, so this should go higher. Real rates still very low, so gold should benefit from these negative real rates. Seasonality is November, very positive. This is typically the bottom, so now is the moment to get in gold and also in silver. Seasonality is very good from November to February. We are still having this cup and handle formation. Gold miner bullish sentiment. You can see that we have bottomed out. So this could go lower, but I think it might go up. So we will see this cycle play out. So now is the time to get into gold miners. I have added a new chart here. Currency circulation, you can see that gold and stocks are correlated to this. As long as currency in circulation goes up, we should see both assets go higher. So lately currency in circulation has flattened a bit. So yeah, we need to see these things go higher, and more money printing will push this upwards. Let's take a look at some leading indicators. So the economy is probably not doing that well. We are in negative territory, so GDP might be slowing down. And that's good for gold. But earnings are still nice, up. Probably will flatten out a bit now. We're not in recession yet, but it might be coming. I wanted to show this chart as well. So this is actually the 2-year treasury, and typically this leads the rate hike cycle. So a lot of people are planning yeah, to see a rate hike from the Fed. And I think that this rate hike might be coming next year based on these expectations. So watch this chart. If it goes back down, then the rate hike will not occur. But if this keeps rising, then you can be sure to see a rate hike. Then some credit spreads here. So you see that the corporate bond market is not doing that well. It's flat. So I don't see a lot of upside in stocks based on this chart. Also here, credit spreads are very flat. It has boomed from here on out, but in the latest months, this is not doing a lot. So I don't think GDP is going to grow that much anymore. So that's bad for stocks. So time to get into something else like gold. Lending is increasing. That's a good sign for stocks. Lending is increasing, and that's also why tapering is happening right now. So the Fed announced tapering. I will go into that later on. As I predicted, when lending starts to grow again, then the Fed will start tapering. And you can see that here as well. The red line has gone positive, and that's when the tapering starts. Like here, when it goes positive, then tapering starts. The blue line is the tapering. Here we also see it go positive, then tapering starts. Here, red line goes up, tapering starts. Red line goes up, tapering starts. So now I expect this also to go back to zero. And that means that the Fed will stop buying assets, treasuries and MBS. So we'll see where this goes. I expect this lending to still keep increasing. So I guess the Fed will execute the tapering process. Central banks, assets still rising, but the Fed is going to taper. Europe is not tapering yet, so no problems there, but the Fed here is going to stop purchasing by July next year. And as you can see here, Japan is already stopped buying. It's going down. Let's take a look at Yellen's wallet. They have increased the debt limit. This is going to go back to 1 trillion so that Yellen has some money to pay the bills. So that's to expect here. Probably that money will be coming from the reverse repurchase agreements. So this blue line will go down a bit because yeah, where is the money going to come from? It's not going to come from Powell because he says he's going to taper. It's also not coming from the market. because that would decrease liquidity. So it will need to come from this blue line here. Money supply is going up, so we're still in inflation. So it's very good to stay in gold right now. Capacity utilization has actually gone down. So that's disinflationary, but it's just a small blip. Nothing to worry about. Okay, so Fed tapering. So this is how the Fed will start tapering. November, December, and then it will go to 0 by June. So what is actually happening here then? Why do I think that gold will go up when tapering starts? So from January onwards, they have been telling the market, Powell has been telling that he will taper, 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 and every time he said that, then gold crashes down. So all of these crashes are based on Powell saying that he will taper. Now the taper has actually started, so the whole narrative is changing. So this is a sell the news event, according to me, which means that from now on, gold will probably go higher because Powell cannot say anything about tapering anymore. We all know that tapering has started. So this is probably the start of a gold rally. And also based on this chart, rate hikes are actually good for gold. If you look historically, so these are the points where rate hikes start. You can see here the rate hikes start. Here also, here, here. And every time when rate hikes start, you see a rise in the gold price, immediate rise. And the gold miners rise even more, as you can see here. So that's what I'm expecting now. By next year, rate hikes will start, and then gold will go up with a spike, probably to 2000 and more. And then the gold miners will all double from here because gold miners are incredibly cheap. And yeah, you can see here also the miners are in a M&A cycle. This is just starting here. So gold might go above 2000 by next year. So this was the currency in circulation chart. Now, so you want to get into the gold miners right now. And I'm thinking about Oceana Gold right now because this company has a PE of 6 right now. A PE of 6. Very cheap. And they are going to increase production. They also announced start of processing at DDPO, which will decrease the AIC by $100. So they're now at AIC of 1200, so it goes to 1100. So that's very good. And also they will double production from here in about 3 years. So this is going to go up more than a double in 3 years from now. And if gold goes up, it can probably go up triple. So I expect this to go from 2 to at least 5 or 6 in the coming years. So that's what I expect to happen with Oceana Gold. Get into the gold miners. And that was it. I'll see you in the next video.